Hello nieces, hello nephews, it's your Uncle Charles here and welcome back to my YouTube channel where we do unbiased technical analysis. And FOMC is done. It came in as expected and I can't wait to talk to you guys about it. But before we get into it, I just want to ask you guys for a big favor. More than half the people that's watching Uncle Charles' YouTube video are not subscribed, so if you guys can hit the subscribe button, turn on that notification bell, it will mean a lot. All right, so let's get into this unbiased technical analysis. So the first thing I want to talk about, because it was so cool, all right, as you guys know, I have my Discord channel and I wrote here FOMC at 2 p.m. today. There will be lots of volatility. If you are not a fan of volatility, I recommend not trading after 2 p.m. today. The expected rate hike is 0.75. Anything less could trigger a bullish response, while anything higher could trigger a bearish response. I talked to you guys about that yesterday. However, FOMC does have a tendency of faking us out on the initial reaction, the first reaction. So the false breakdown and breakout will be the setups I'll be paying close attention to. Guys, you guys know how much I love the false breakdown and the false breakout setups. Okay, now before I get to that, I want you guys to look at this beautiful pattern right here. There's the dump after FOMC. Okay, I talked to you guys about this very nice bearish pattern yesterday. If you guys watched yesterday's video, I talked about the evening doji star pattern. It's a bearish reversal pattern, and this was the range you guys see here. And I mentioned that we was developing the right side of this range, which could lead to a drop. And you guys see here, there it is, the range from yesterday, and it led to the big nasty drop. Shout out to FOMC. It was beautiful, guys. Keep in mind, all these moves were alerted in the Discord, so if you guys looking for a profitable trading community, definitely consider joining. Okay, now I will talk a little bit more about the intraday move. Okay, because look at here, this right here was at 2 p.m. That initial fake reaction from FOMC at 2 p.m. Okay, but look at here. If we're playing from a just technical perspective, okay, I had a level around 382, this yellow line right here that I was watching. We broke it down around 12:15. Recaptured that line around 12:45, which I mentioned to the group. If 382 is recaptured, to look for calls. Okay, this was mentioned in the Discord. And look what happened. False breakdown setup, which led to the upside. Okay, even though this was FOMC reaction. Okay, and FOMC is gonna get the credit, but this was a very nice false breakdown setup, which is a bullish setup. Okay, and then boom, we did not have to call the top. Okay, I had a level around 388, strong rejection, hot stove, and it gave us a false breakdown. Breakout setup. False breakouts are bearish. Okay, I had a level around 386, closed back below 386, alerted the group, took the trade, and bam! Look at that. Beautiful move from 386. Maybe you caught the top at 388, I don't know, but the false breakdown 386 led up to a beautiful move as low as 374, which I mentioned to you guys was one of my support levels. Okay, beautiful move. This was not predictions. It's just good old-fashioned, unbiased technical analysis sprinkled with some experience. Okay, now let's get to the daily chart. We finally lost that 380 level. All right, I talked to you guys about the 380 level, how it's the 38.2 retracement level. Okay, from August high down to October low. It's also the 38.2 retracement level or fib level from March 2020 low to January 2022 high. Okay, that critical level was 380, and as long as we're below it, Uncle Charles, I'm gonna say it, is bear bias. All right, now just because I say I'm bear bias, remember, it's all based on conditions. All right, I am a sheep. Uncle Charles is a sheep. I am not a goat. I am a sheep, and the price action is my shepherd. Okay, as cheesy as that sound, that's how I feel right now. Uncle Charles, aka the sheep. All right, so that means if 380 recaptures, I will be playing that false breakdown setup unbiasedly, because if 380 recaptures, that's bullish. This breakdown today was, was a false breakdown. Okay, false breakdowns bullish setup. Okay, so levels to watch out for is, got a previous pivot high right here around 375.3ish. Okay, well, I'm gonna round it up to 375.5. Okay, SPY closed below that today. That's gonna be first resistant. All right, if SPY gaps up above that, then that level 375.5 will be first support. Okay, but as of right now, as long as below it, that is first resistant and must clear to trigger more upside. I got 378, previous pivot high back in October 4th, and of course that critical 380 level. Bulls need to recapture 380, okay, to trigger more upside and put the momentum back in their favor. Keep in mind, since October, mid-October, SPY has been in an uptrend since mid-October. Okay, so the bears still have more work to do to prove that this next leg down is coming. It's here. All right, it's beginning. So as long as we're below 380, I am bear bias. 375.5 and 378 also needs to hold as resistant. Okay, the next critical support that I'll be watching is 370. What level was that? Sorry, 371.8ish. Okay, 371.8. That's base. It's a critical level for two reasons. It's my multi-year trend line from connecting September 2020 to October 2020 to June 2022 lows. All right, and also you can see this trend line from August high to September high, and connects a third time on October 24th high. Okay, breaking down 371.6 would break down those two trend lines. That will give us another false breakout based on those trend lines. Okay, so below 371.6 is very bearish, with the next critical level that I'll be watching, okay, it will be at 367.84. 370.6 would be en route, of course. That's one of the levels I'll be watching as well. But below that, 367.84, that's the 23.6 retracement level. That will be very critical level to watch. If that level fails, we are definitely going to get more downside down to 363, possibly down to 357. Okay, June lows incoming, maybe 357 incoming. 357 was a September low. Okay, guys, so keep it very simple. Bulls need to recapture 380 to put momentum back on their side. Okay, 375.5, 378 are also resistant levels. As long as below 380, Uncle is bear bias. All right, with 375.5, if that holds, remember that the next critical support I got is 374. Below that is 371.6. Below that is 370.6s, and then 367.84. Okay, you guys got my levels. Please add it to your charts. Look at this triple Q, beautiful. Yesterday I talked about triple Q, how it lost that 277 level. It needs to recapture to be bullish. It back tested as a resistant, has some intraday, it got above it intraday, but could not hold, giving us a false breakout intraday. And at the end of the day, it just pushed on down. So the first critical resistance is 269.2ish, with 272 and 273 above that. Okay, as long as below 273, I'm overall bear bias. Okay, but the first resistance is 269.2. As long as below 267 would be first resistant. Okay, sorry, so 267 would be first resistant with 269.2 above. Okay, obviously 265.7ish is now a support level, because that's where it closed around today, with the next critical support at 264. If that fails, 262 and 260 are next. Okay, guys, so bottom line, I'm not bullish unless it can recapture 267 and 269.2 to put 273 back in play. Okay, as long as below those levels, like I said, 265.7, 264, 262, and 260 are next. Tesla gave us a nice bearish day as well. All right, you guys can see here, zoomed out, I got this nice triangle pattern. Okay, let me change this color so no confusion. Okay, you can see I got the white line, I got this nice triangle pattern. Okay, now I got the 50% fib level at 213. Okay, that's the next support level that I got for Tesla. If that fails, 211 211, 208, 206.8 are next, okay? But based on this triangle pattern, the breakdown level will be at 199. If 199 fails, that's a breakdown of this big triangle pattern that I got. All right, to be bullish, Tesla needs to recapture some levels starting with 216, 218.3, 222, and 226. 226 is the 23.6 fib level. That really needs to recapture. All right, guys, we're going to end this with option flow. All right, as always, filter for 500K premiums or above. Now, options don't look that bearish for some reason, but it's 67% for puts right now, okay? Somebody bought some calls, 382 strike price at the end of the day, okay? November 4th is the expiration date, so pretty aggressive. It was a sweep order, so maybe we'll get a dead cat bounce tomorrow or something. But overall, bearish as usual on the option flow. Let me see. Triple Q, bearish as well. Somebody here on Triple Q bought 260 strike price for puts. Okay, November 4th. Very aggressive. 800K premiums, sweep orders, size over 10,000. So that's really aggressive, even more aggressive than that call for the SPY. So let's see who wins tomorrow. And Tesla, maybe they took profits already though. But yeah, Tesla 88% into puts. Nothing really sticking out to me. But yeah, big money overall bearish on Tesla. Alright guys, I hope you guys found value in this video. Thank you guys so much for watching. Peace.